Hey, it's Mike. I'm not an investing guru. I'm an average guy sharing my investment journey on the internet. In today's video, we are going to talk about the 8-month TSLY review using margin. One of the key pillars of the strategy is to borrow money at a lesser rate than a holding's ability to pay dividends. So on this, in my account, I invest in a Yieldmax fund called TSLY. TSLY distributes about 54% per year, and its 30-day SEC yield is about 5.15%. Investing in a fund like this, if it's if it's distributing 54% and I'm borrowing at 8%, which that is the margin rate that Robinhood has, then theoretically that is a side stream of income that I'm building. So let's go over the actual amount that paid out. So this is my overall portfolio here. So I have $159,545. You can see here overall in the last month we took a $30,000 hit because Tesla just has not been performing well. And so, if you're investing in TSLY, Tesla's the underlying that they're using to sell covered call options on. So, for the most part, if Tesla's doing bad, then TSLY is going to do bad, which TSLY is not performing that well. But this is a story that's been playing out for years. I've been owning Tesla for years, and this is nothing new. There's a lot of people. I follow the Yieldmax Reddit thread, and there's a lot of people that have paper hands in that community because, everyone, when the distributions are high, everyone's like, oh yeah, this is the greatest fund ever. But then, once the fund doesn't do that well, or the underlying is not doing that well, everyone starts running for the hills. So let's go over the TSLY position. So again, I borrow to own TSLY. I do not borrow to own any Tesla. There's some commenters that said, oh my God, you're borrowing so much money. I am not borrowing any money for Tesla. It is only for TSLY because it pays an income. I don't borrow money into assets that don't pay back income. And then I just own a little bit of VTI and VXUS. So let's go into the TSLY position. So you can see here my total market value is $17,986.81. Today's gains is about 2.72%. And then my total return, as you can see here, is abysmal. It is minus $9,500. Again, I'm not super concerned. I think a lot of people are concerned because Tesla's not performing well, and that's why that price is going down. At some point when the share price of Tesla starts recovering, the implied volatility will start going back up, and then the option premiums will go up, and then therefore we'll start recouping some of these gains. But there is Elon has a big target on his head, and the powers that be are going after him. So, there's Tesla stock and there's Tesla the company, and Tesla the company is still producing more cars year over year. They're producing more revenue year over year. They're on track for multiple business lines that are in the hundreds of billions of dollars in each. So from the company standpoint, they're putting the pieces to be even more and more successful, whereas the stock price is not doing what the company is doing. They missed some expectations on the last earning, but that's not a deal breaker. Like if you look at the 30,000 foot view, they're still executing on all the things that they're saying. That was my side rant, but we're going to continue. So my average cost basis, $13.76. And I finally eclipsed over 2,000 shares. And one of the key things about using margin in an investment account is these things called margin requirements. And so this maintenance requirement is the most important thing. There's a lot of investors who invest in Yieldmax funds or specifically like Cornerstone funds, and their margin maintenance is not that good. It's like 30, 40, 50%. And there's some Yieldmax funds that are over 100%, where on Robinhood, it's only 25%. So in theory, if I borrow $10,000, the margin maintenance only reflects $2,500. So technically you can borrow 4 to 1. Continuing on, we're going to keep going. And this is like the history of all the transactions and everything I do. So TSLY paid out $799.49. What I do with that will be what goes on in my next spreadsheet, but I want to go over just a couple more tidbits here. So just look at my account. So you can see here that I'm about 10% margin used, very nominal amount, not something that's going to put me in a margin call. If you look at my margin status here, we're at a low risk. Okay. That's how much my margin interest is per day. So yeah, we're at about 10%. So that's exactly where I want to be. I don't want to be over 10% when it comes to borrowing money. And then you can see my equities over here. These are my positions. In my Tesla position, you can see I'm down. Tesla's up, Tesla's down, and it fluctuates just like how the weather changes every so often. Okay. Another important thing about this, building this passive income stream here, is the margin maintenance here. So technically, there's this thing called being margin called, and if your account value hits below this number right here, then you get something called a margin called. So what will happen is the company, like for example, Robinhood, would sell a bunch of your holdings until you can cover whatever the margin amount is. So you can be like under $3,000, so it'll sell you $3,000 of other holdings. So what will happen is you own Tesla, it would sell those positions. But right now we're in a safe zone. I mean, we have a long way. My account's 159,000. 68,000 is the margin maintenance. So we are good in that regard. So, we're in a very safe amount that we're borrowing. And let's talk about the actual performance of TSLY. So overall, I've been investing in this fund for 8 months. So these are the February numbers. Price paid $27,533.76. What this entails is the $20,000 of margin that I invested into this account, as well as about $3,000 of my own money, as well as whatever I have reinvested into the fund. So my total account, the amount I paid is that amount. Okay. And then here, the margin amount. So in January, I plopped in another 10K, and now we're kind of paying it down nice and slowly. So total margin amount is $17,925.43, which comes out about 65% of my income portfolio. This is not accounting for my Tesla stock itself. So, once I get down into the 50% mark, I would be much happier. Moving on, just like I said, the payment was $799.49. So this last payment was about 40 cents, this distribution, and lo and behold, it's because Tesla wasn't performing. So when the share price of a stock goes down, the implied volatility goes down, therefore the premium goes down, therefore the distributions go down. When the share price of an underlying goes up, implied volatility goes up, premiums go up, and the distributions will be higher. So right now, in terms of people who are holding TSLY, we just got to hang tight, and right now would actually be the best buying opportunity. It's $8.99 a share. It used to be, the peak has been $18. It's been on a steady decline, but there have been times where it went on a decline and has recovered because of what the Tesla share price has done. So I think as long as we keep holding on, I believe we will be rewarded greatly for it. And I believe that at some point, the amount that Coney has been paying out in distributions will be Tesla at some point. But that's a whole nother story. But even the 40 cents per share is really good distribution. Moving on. So this is the amount the expenses for borrowing the money. So this accounts for the interest as well as the Robinhood Gold that I pay for. So for the most part, if you take $3.71, multiply that by 31 days, you get this number plus the $5 Robinhood Gold. So those are the expenses. And then, I've been responding to a lot of comments, and I've been following the Yieldmax thread on Reddit. And a lot of people were saying that the taxes are return of capital. They are not short-term capital gains rate. I find that very difficult to believe that a ETF that is generating income from option premium is not taxed at short-term capital gains, which is option premium. Now, I will be doing my taxes February 15th once Robinhood releases its tax documents, and we'll see if it is return of capital or if it is short-term capital gains tax. So, I've been setting aside the money as if I am paying short-term capital gains and not return of capital, but, we'll see. But I'm setting aside the money right now, so I'm not going to be left with a massive tax bill when the dust settles. Moving along, reinvestment. So I have done a bunch of mathematics, and if you invest into a income fund like TSLY, and you reinvest back in 25% of the money it pays out, that even if the share price decreases, you can still increase your portfolio account as well as increase the income amount. So, we're continually putting in 25% every single week, and this $199.87 has already been applied to this. So, which then put me over the 2,000 share mark for TSLY. Now, one of the things that I do like to account for, so, in my brain at some point when I retire or have the ability to retire in the next 10 years, I want to know that after taxes and the reinvestment, securing my fund, knowing that it's growing and the income is growing, how much am I going to have left over? So I've just been accounting for this net gain over here on the side. And so, for example, what this comes out to is about 1% a month. So if after all expenses and reinvestment, you're gaining 1% a month for 12 months, that's 12% a year. If you have $1 million in this invested in this fund, or you borrowed $1 million or whatever, you'd have $120,000 in income after all expenses and taxes. That is a pretty solid amount of money. Most people, when they invest in dividend funds, if you had $1 million, you'd only be getting $30,000. So that is a staggering amount that you could very comfortably live off of. And then what I like to account for is, because technically I'm not using any of my own money when I borrow this money, this is money that is developed because I already have money. It's like my money working for my money. So, the TSLY position here is the foundation of my account. And then this is the side income portion here. So for the most part, I'm getting an extra 0.17% boost because I'm getting paid this right here, right? So after taxes and reinvestment and expenses, I'm getting an extra $271.86 for doing absolutely nothing besides holding a fund. That is awesome. You can judge the strategy as much as you want, but that is pretty incredible. Now, I'm not saying that this is perfect. So, I've only been investing this for 8 months, so there's still a lot to, there's still a lot of room to see how well this fund performs. And for the most part, this is something like when you invest in a fund like this is for something as if you were already going to be like an option investor. Like I used to invest in options, and this is a great complement for not having to do it yourself. Like you pretty much outsource the ETF to do all the option writing. I prefer to hold a fund like this and not have to roll the positions every week and constantly monitor the market. I could just know that the fund managers are doing the right thing and that they're rolling the calls up or down and so on and so forth. So it's really good investing in a fund like this if you're already going to own options. And if you were going to have a position, like an option position in your account, you shouldn't go more than 10%. And so any option position in like your overall portfolio strategy should not be more than 10%. So with the margin I'm using, it's putting me at like about 10% of an option play in my account. So I really don't want to go above that as well. If this generates more income, then I can move this money into other places. So yeah. Final thought on this, kind of what I do with this money. So right now, when I get this total income, the first thing I do is I immediately do my reinvestment. I set the money aside for taxes, and then whatever's left over is I'm paying this margin off as fast as possible. So I'm not using the rest of this money to reinvest in VXUS or VTI or TSLY itself. I'm trying to pay this down as fast as possible. Once I have this paid down as fast as possible, then what I'll do is then I can go ahead and put it into VTI, VXUS, or TSLY. Now, another component to my strategy is to invest in kind of tranches, if that makes any sense. So when I put in the 10%, this account used to be $200,000. So 10% of $200,000 was $20,000. Since the account is under that, I'm still paying off that 10% of $200,000, right? So I'm slowly bringing this number down. Once this is paid off, I'm not going to be borrowing any money until my account hits another milestone, which would be $300,000. Once that account hits $300,000, then I'll borrow 10% of $300,000 again, which will be I'll borrow 10% from that extra $100,000. So then now, I already at $200,000, I was at 10%, which was $20,000. At $300,000, I would have borrowed $30,000 total, but then 20 of it should have already been paid off by the time this hits that number. But say TSLY share price blows up to $700,000, then I will go ahead and borrow 50 grand worth if the account is worth $700,000, but that's not going to happen in a long time. And by that point, I'm going to have every tranche paid off by the time the next milestone hits, if that makes sense. So, I'm not going to be keeping a 10% margin position open at every given time. The goal is to pay it off as fast as possible. and then say I'm like hovering in like a purgatory state where, you know, I'm at like $250,000 portfolio value, I have it paid off, then all that extra money goes towards like the other higher quality funds like VTI and VXUS. All right. End of that component rant. Okay, so income fund value, you know, $17,986. We're down $9,500. Okay, so overall, from a performance standpoint, not doing well, right? So this is counting reinvestments. Okay, you know, Tesla share price not doing well, so therefore Tesla share price will not do well. So what I'm interested in, which is actually right now, is the most important time to be investing in Tesla, right? So if you look at the 1-year chart, Tesla, you know, kind of performed well here, came down, came back up, came down, and now we just dropped like a rock. So what is interesting to be following with Tesla is how does it do when the market is, when the underlying is not doing that well, and how does it do when the market or that underlying is going up, right? So this is going to be the time to monitor. So, you know, when I was making, was it $1,000 here, like we were making like 50, 60, 70, 80 cents. There was a time there $1 was paid out. We were making some pretty good money, but that's because the share price was kind of hitting all-time highs over here for the year. Now we're hitting these lows and we're still getting paid 40 cents per share. That's pretty solid. So yeah, right now, like on paper, we're down $9,500, but we're still getting good income. And within no time, like this is gonna be paid off and we're gonna be in the positive. So the total income that has been paid out in this by investing in this fund has been $4,729. Total expenses $558. Total taxes for 2024 $500. Last year was $750. Lifetime taxes there. We have our base reinvestment, which is this amount, and then our net gain is, say I didn't want to, you know, pay the margin off or invest in anything else, I could just be taking this money and pocketing it for myself. An extra $200 a month doing not necessarily anything, fine by me. Okay. So, you know, just kind of going over, like recapping, this plan is not for everyone. Like, you know, if you're someone who's an option investor and understands covered call writing, this is probably something you would probably want to dabble your toes in. If you have no idea how option investing works or implied volatilities or covered call investing or anything like that, this is probably not something you should be putting in your fund. And if you are going to be putting it into your overall portfolio strategy, it shouldn't be more than 10%, right? There are some people who are absolutely banking that this is going to be the end all be all. This is not the case, right? So, you know, I can do the strategy because I put money in a 401k. My work matches some of my 401k money or 403b or whatever you want to call it. I have a Roth IRA that I fully fund every single year. I put $134 every single week. My wife has her Roth. She has her 401k. So this is kind of like the extra credit, like where we can try squeezing out as much gain as possible and try unique strategies to do that. And so that's what I'm trying. So, you know, putting in 100% of your money into Tesla, probably a dangerous proposition. Probably shouldn't be doing that. But, you know, if you have, you know, pretty solid underlyings, you are like the Bogleheads, the Bogleheads, VTI and Chill, and then you want to just kind of build a little something on the side, then yeah, that's totally for you, but you shouldn't be putting all your money into something like this, right? So carrying on, you know, I would love to see the performance do better, but I'm a patient man. I mean, as long as I'm still getting dividend payments, I'm not going to be complaining over here. I'm getting a monthly yield of 1%. I mean, we're going to be getting this paid off. I would like to see where we're at the year mark. And, you know, again, I'm going to continue, you know, sharing this process with you guys, see if this is something that you'd want to add to your portfolio or not. But, you know, at the end of the day, I hope you enjoyed watching it. So I hope you all have a good one. I hope that this could help you build another side stream of passive income for your family. And I wish you all a good day.